Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode explores a new topic with a guest who brings their unique experience and knowledge. Tune in and discover something new each time you listen.
Hello, welcome to BankTalk. I'm Rich Carty, your host today, sales executive here at Remedy Consulting. Today we'll be joined by Brian Fleming, president and principal at Solidus, a design-build firm specializing in branch transformation for banks and credit unions. We'll touch upon a few items, but kind of talk about the idea that the branch is dead. Is it a myth? Is the digitization taking over? But we'll talk with him and see what's going on in the industry and look forward to a great conversation. Brian, thanks for joining us today.
Yeah, Rich, glad to be here. This is a topic that's brought up often as I travel from the Mid-Atlantic through New England. It's on the top of everyone's mind, so I'm glad we have an opportunity to discuss it.
Absolutely. And why don't you give us a quick background on yourself, Solidus, and then we can maybe keep the conversation going from there.
Sure. I grew up in Connecticut, went to school at Colorado State, played rugby for the Rams, and then met a girl who was from Alaska who was there to swim. And we decided to take a 2-week road trip up to Alaska, and that 2-week road trip lasted 20 years. While we were there, we raised 3 kids, and I had a general contracting business, and I specialized in remote logistics. So most of my work was on the northern area of Alaska off the road system. So a lot of my projects were fly-in only, and enjoyed myself, met a lot of very unique people, was fortunate enough to work in 27 different native Alaskan villages and had great connections. So sold my company in 2018 and joined Solidus. Solidus has been in business since 1932, originally started as a furniture dealership. And then about 30-ish years ago, sold off the furniture dealership and specifically looked at a different way to penetrate and support financial institutions through construction. So we're a multi-state, we're licensed in 32 states, and our sole business is financial institutions from design through execution.
Very interesting. I mean, that's quite the background. I grew up in the Northeast and made my way to the Midwest, but I never got out to Alaska. So that's some great experience. I'm sure you saw some amazing things out there at the same time.
I did. I mean, Alaska is probably the most unique state in the United States. I was very fortunate. I visited all 50 states, including every island of Hawaii.
Wow.
And there is no state like Alaska. So if you ever get an opportunity, please go. We'll tell you it's gigantic. I was there for almost 20 years and I only saw a small portion of the state, but some of the most beautiful people, some of the most hardworking people, to say the least.
That's great. Well, thanks for sharing the background there. Out of curiosity, how'd you end up with going into business with Solidus? Like you said, once you kind of sold your business, moved back towards the mainland of the U.S., how did you fall into the Solidus world?
Yeah, I was very fortunate. I was successful with my first company, and I was looking, and I was in my early 40s and was just looking for a company that was unique. It was a people-first company. It was someone that really cared about their employees. Also, just a unique deliverable. So as a general contractor, I come from the traditional world, the design bid world, which the way our work was is that we would receive a set of plans and then bid the project, and there's some shenanigans that typically go on. It's just part of the industry. The difference with what really attracted me to Solidus is that we work with financial institutions and we work from the conception of a project. So from conception through execution. So the game that's played with traditional contracting was not happening at Solidus. So for us, I guess one of the big differentiators here is that we don't call organizations clients, they're really partnerships. The vast majority, about 94% of our partners, we have one project after the other. We really don't have one-off projects. And that was something that was very unique. So the way that we look at it is our job is to help an organization grow and innovate. And if they're successful, we're going to be successful. And that was really a big differentiator.
That's great. I don't want to spend too much time on your background. I know, gosh, I could ask you a bunch of questions there, but I'm sure the audience is going to want to hear a little bit more about this theme around our branches dying. How does that play in certain parts of the country? Our smaller FIs versus maybe our mid-size. Want to touch upon what you're seeing? Is it a myth? Are the branches dying, and kind of where we stand today?
Yeah, like I said, it is on everyone's mind. I'm asked this no matter where I travel or no matter which client I'm in front of. And are the branches dying? I would say not at all. The branches are definitely shrinking in number, but they're not disappearing in relevance, to say the least. I would say with small institutions, they're doubling down on them, but they're doing it in much smarter ways. So, what I would say what's true is that the routine transactions, so for example, deposits, withdrawals, balance checks, they've dropped dramatically because of mobile and online banking, but banks have had to consolidate. They've consolidated their overlapping locations, and all of this makes absolutely perfect sense. But this is a thing that's really true about the situation, and that's that branches remain essential, and they're most essential for the high trust and the high value interactions. So to your audience, they already know this, preaching to the choir, but those are your mortgages, your small business lending, wealth management. And most importantly, it's resolving complex issues. So the branch definitely is not dying. I would say it's evolving very quickly. The financial institutions that are stagnant, that are not evolving, they're simply dying.
And they're evolving. Obviously, you keep up with the times. They say, what's changing about them? What's some of the biggest changes you're seeing?
The number one change that we've seen in branches is that they're shifting from service centers, which is your typical transaction heavy, and they're turning into advice centers. So the model is becoming more of a hybrid. So it's seamless integration between in person and your video and your mobile. The branch teller, the traditional teller, is turning more into a financial concierge model. And that's what we're seeing most happening throughout the industry.
Okay. Kind of been curious, what would make an institution want to move a current location to maybe an alternative type strategy? What are some factors there, and maybe a success story or something along those lines?
So, first and foremost, branches are an enormous investment. We all know that. I mean, your audience knows that very well. I mean, they're looking at tremendous capital investment for a branch. And it's a difficult question. So if I'm a CEO of a bank or I'm a board, I'm thinking, do I need my branch? And what we have seen is that, especially the young generations, let's say you're 20 and 30-year-olds, what we've seen throughout the country is if a bank or a credit union closes a branch, that young person, let's say in their 20s and 30s, if their branch is not visible, so whether they're driving to bringing their kids to school or driving to work, and all of a sudden that branch disappears, they are very likely to move their money to another financial institution that's visible, even though they may never walk into the branch. They're a mobile banking heavy. And the
Right.
reason is, and that goes back to my answer earlier, is that branches are not transaction places necessarily, but they're consultative. So there's this safety aspect of having a branch. Branches are getting smaller. And the way to look at it, the financial institutions that are being successful is they're looking at smaller branches as a billboard. So that's becoming more of a, if you ever need us, we're here to help. And then when the customer or the member walks through the door, that's an opportunity to cross sell and also to help with an issue.
Yeah, I think you're absolutely right. I was just on vacation with my family a few weeks back and driving by local institutions. Like, oh, I'm familiar with them. And even my daughter, who's younger, she then would ask me a question. And it's just a conversation that's now top of mind. In any case, it's a good point.
Yeah, and what's becoming very important, again, especially to younger generation, but even the older generation too, is that your customers and your members. So if you're a credit union, your members, they're becoming more conscious of what does my financial institution believe in, and who do they support. So if your customers or your members are more concerned about what do we stand by and what do we believe, what you're able to do is now you're selling that relationship. And through that relationship is where you're going to achieve your sticky deposits. So what you're going to do now is you're building a partnership with customers. You're building a partnership with members that you're going to walk through life and provide financial literacy. You're going to be a concierge service. You're going to help people when they want to take out a line of equity or they want to refi a mortgage or enter a money market. And that's really where the value is becoming now. It's more that relationship based versus that transaction based. And that directly relates to the branch presence. Smaller footprints, less FTEs, but also it's becoming more of banking specialists that have to know, for example, be able to advise financially, more of a digital banking specialist. And it's becoming more of the universal banker versus just the traditional teller. So they're highly skilled, but also multiple skilled. And that's really what the foundation of success is in this industry.
We'll be right back.
Ever feel like your tech budget's running the show instead of supporting it? You're not alone. Between bloated vendor contracts and outdated systems, a lot of banks are stuck paying more for less. And here's the kicker. Those big tech vendors, their contracts are built to protect them, not you. So if you're hesitating to make bold moves because of tech costs, it's time to flip the script. That's where Remedy Consulting comes in. We help banks take back control, cutting through the fine print, optimizing spend, and finding tech solutions that actually fuel growth. And we're offering a free review of your tech stack, spending, and vendor contracts. No pressure, no sales pitch, just expert insight to help you make smarter decisions. Even if we're not the right fit, you'll walk away with clarity and confidence. So go to remedyconsult.net or call 206-295-5776. Let's make your tech work for you, not against you. Thanks for listening to the BankTalk podcast.
Yeah, that was one of my questions too, is, the impact on staff for an institution. It seems like they're going to need to have a different skill set than take your tellers. There's going to probably, again, you mentioned it, fewer tellers within the buildings, but staff related, is there anything else you can touch upon in terms of what those credentials might look like or how they can maybe have success within that nature?
Sure. I mean, it's a great question. I think the best thing for financial institutions to think about is that when you're moving more to that universal banker model, is a effective universal banker has to do three things. They have to be able to sell, they have to be able to advise, and they have to be able to solve problems. Those are the three main characteristics of a successful universal banker. So the way to
Right.
look at it is the performance metrics of a universal banker, again, through selling, advising, and solving problems, is they're moving from the transaction volume to the relationship depth. It's product penetration. And then ultimately, that's where the customer outcomes come from. So it's a shift from processors to advisors. And the institutions are investing in their people during the transaction. And those are the ones that are really pulling it.
That's a great 3 points of what they could look for. You make that a t-shirt or something and try to brand it that way.
It's funny. I was thinking of t-shirts the other day, Rich, kind of a little bit off topic. There is a whaling museum in New Bedford, Massachusetts, and it's a very popular whaling museum. And they recently received a review, and they received a 1-star review. And the review was the worst aquarium ever. And the comment was,
Oh my
this
gosh.
person thought that they were going to have the live whales. So now they're marketing New Bedford Whaling Museum, the worst aquarium ever.
I love it. That's awesome. That's awesome.
Financial institutions, again, with that universal banker model, those are the three things that your people have to do. And that becomes, that's another topic that's brought up a lot. It's like, look, we're trying to minimize our FTEs. Branches are smaller. What do our people need to do? That's what we tell them. They have to be able to sell, advise, and problems.
Yeah. All right. Well, what about, again, it's a big cost to build a new building. We touched upon kind of the remodeling aspect. Is there anything else you can touch upon there? What does that look like? What's step one? What's step two? And what's that look like 5, 10 years down the road?
Yeah, great question. I mean, this is once we are in front of a potential partner and they agree, they want to go more to the universal banking model. They understand that transaction volume is down. So now what do we do? That ultimately translates into the physical branch. In modern branches, they're looking a lot less traditional. The traditional branches, you walk in the door and you just see a gigantic line of tellers. Nowadays, those teller stations are probably 10% staffed
Yeah.
versus 20 years ago when every teller was staffed and you had to line out the door. So the modern branch is a blend of the retail tech and it's also a consultative studio. So again, getting into the model of your typical FTE, the universal banker, is at those opportunities when your customer or your member walks in the door, those are opportunities to sell, advise, and to ultimately problem solve. So what we're seeing is it's more of a open lounge style seating environment instead of the long teller counters. We're seeing digital kiosks for quick service. And there's also private meeting rooms for lending, wealth conversations, and also opportunities for video banking. So we're
Yeah.
building quite a few video banking booths. And ultimately, what those are able to do is it connects the customer or the member to a customer specialist. So cash handling is minimized, and the branding focus is more on experience and trust versus transaction. So some of the best ones feel a good example is an Apple store. It's an area where you can meet a financial advisory office, which ultimately you want it to feel welcoming. You want the branch to be technology enabled and really designed around guiding conversations rather than being concerned of cues. And that's something that we're seeing across the board.
Okay. Yeah, I mean, the Apple Store probably is a great example, and you touched upon this a little bit before, but Gen Z, that's an important demographic. Capturing them, keeping them, making sure that they're not moving the money to a different place. Is there something specific? And I know, again, we talked about it a little bit already, but is there anything else that for Gen Z specifically that you guys might be able to help with, or you think the industry is providing and keeping those customers there?
Yeah, something that we see often. I was actually with a potential partner last week and we discussed the physical branch, and they are a relatively large financial institution, and all of their branches have teller lines. Some of them look like they're 30, 40 years old. And it's interesting that the conversation typically evolves into should we do pods or we like to call them hybrid tellers. It's almost as if you're having the should I buy an Apple or should I buy an Android? Android being the traditional teller, Apple being the pods. And what the conversation typically evolves into when it comes to a hybrid teller or a pod is the reason why you would want to evolve towards a pod is it forces your universal banker to walk from behind the pod to meet the customer or member at the door. And that's that relationship based. Again, it's not transaction heavy, but it's more consultative. So when someone walks into the door and they see kind of that Apple store retail focus,
Yeah.
the universal banker is going to walk from behind the pod or the hybrid teller, and they're going to meet and start a conversation. What are you here for? Understanding that more than likely it's not just to conduct a transaction, but it's an opportunity to sell, an opportunity to advise, and then ultimately, hopefully, solve a problem for them. So that's what's changing in that branch environment. Again, it's the technology enabled environment, guided conversations rather than cues, like I said earlier. And that's the physical branch transformation that's happening. So the best way to understand it, smaller footprint, more consultative, and you ultimately want an environment where your staff feels comfortable walking from behind a desk or a pod and starting that conversation, relationship based. A good relationship turns into a partnership. A partnership turns into those sticky deposits. Then what you'll see is if you build that relationship, there's less focus on rates. People are not rate shopping. And what you can
Oh, for
build
sure.
then is now you can build a multiple generation partnership. And that's what we're seeing with the changing banking environment.
That does make sense. I think a again, living in the Northeast compared to the Midwest, I never saw as many drive-through teller lines, if that's the right term. But I don't see many of them at all anymore. So you're saying you'd rather have them be walking into the building if you can to maybe, like you're saying, cross-sell and continue to build upon that relationship.
Yeah, and ultimately, every financial institution is thinking about the ROI. And what we're seeing here is branches are no longer judged mainly on deposit volume or transaction counts. The ROI is completely changed. And or traditional metrics, excuse me, like teller transaction volume and walk-in traffic is significantly less dominant. I would say that today's winners focus on loan origination. So especially for mortgages and small businesses, cross-sell ratios, customer acquisition and retention, and high value relationship growth. Simply put, I mean, a strong branch, it now influences digital adoption and it turns foot traffic into deeper relationships. I think the key question that every institution should be asking themselves is, what role does the physical space play in a digital first world? And the answer we hear from all of our clients, regardless if it's a small financial institution, a tiny credit union, or a multi-billion dollar bank, is it's very clear. It's trust, advise, and support complex decision making. And again, that's that partnership. That's that relationship focused, people first financial institution. Those are the ones that are winning, and those are the financial institutions that are growing.
That's great. And I wanted to ask you on the ROI too, Brian. Do you have a story or maybe a statistic of a recent, just a success story in the last few years of how that played out and how they look back and say, I'm glad we made this decision versus that? Or, yeah, I'm catching you off guard here, but figured I'd see if there's anything else you could kind of shed light on.
Yeah, one of my favorite stories was a partner we have in New Jersey, and it's a pretty good sized credit union. They had a phenomenal location, and right around them, they were in a busy strip mall. There was a Wawa. I don't know if you've ever had the opportunity to go to a Wawa. If you haven't, I highly recommend it.
I
Uh,
have, yep, in passing.
and right behind them, they had a very large pharmaceutical company that was probably an eighth of a mile away. They had traditional teller lines. And what they realized is that their membership base wanted more hours. So the pharmaceutical company was working 3 shifts. So effectively, they're open 24 hours, 7 days a week. The model that we helped them with is they went away from teller lines. They focused on that relationship type transaction, and they brought in an ITM strategy. So now what the physical branch looks like is you can walk into the branch, and in the branch you have a whole line of tellers or a whole line of ITMs, or you can walk into a branch and you can receive that advisory help that you're there for. So now what they're able to offer is one of their large customers, obviously is the pharmaceutical company,
Yeah.
is they now have access to ITMs 24 hours a day, 7 days. And it has been a tremendous success story. So I think the reason I bring that up is, one, it's a financial institution that was willing to evolve. They understood that they had a challenge. They brought us in to help them with problem solving. And now they're able to grow because of it and using that ITM strategy. And we've seen it to be incredibly successful for them. And I think really at the end of this is that's one success story. But often what I tell potential partners here is that it's not a one size fits all. There's not a one size fits all solution to any branch or any financial institution. So, for example, you may have a branch that's in a rural area and the demographic, the average age is 65 years old. In that application, a traditional teller line might be the best fit. But if you're in an area like the story that I just told in New Jersey, you wouldn't want a traditional teller. The pod makes more sense, and then an ITM solution. Same organization, branches look completely different. So the branch, again, has to fit the demographic. And you also have to question of, if we're interested in deposit growth, who is the segment within that environment, that tapestry, or that socioeconomic status within that community? Who are we trying to attract? What are they looking for? a 25-year-old, their experience walking to a branch is going to be very different than a 65-year-old.
Yeah.
It's very, very challenging. There's similarities between those two groups is relationship focused. It doesn't matter if you're right out of college or you're just entered retirement. It's still the relationship based banking. And that ultimately translates into the physical branch like we've spoken about. And again, it's the universal banking model, their ability to sell, their ability to advise, and ultimately their ability to problem solve.
I mean, Josh, you're really kind of catering to the community with the data and the information you have at that point to really not only be successful, but make it work for the people that are visiting. And that's an awesome story. I appreciate you sharing that. And it makes a lot of sense. I think that's great.
Yeah, I would say in conclusion here, when it comes to who's successful, I'm asked that every time I'm in front of a client. What is this organization doing, and why are they growing? And I'm frustrated. I'm trying to figure out how to grow here. And I would say the bottom line is the branches are not dying. Let's just get that out. The branches are not dying,
Yep.
but they're evolving. They're evolving from the transactional infrastructure into the relationship driven sales and advisory hubs. So the best way to put it, the winners aren't the ones that are eliminating branches. They're the ones that are redesigning them intelligently. They're also right sizing their branch network. We have some organizations that are just overbanked in one community. We have one partner that we're working with right now in the Mid-Atlantic. They have 5 branches in one small town. So what we're looking at is now let's right size them. Do you really need 5? You more than likely need 3. And instead of having the 5,000 square foot branch with a gigantic lobby, when someone walks into the door and they see the 2 FTEs behind a teller line of 13, that makes someone feel what's going on with my financial institution. Where is everybody? Feels like my bank is dying. So what we're doing now is we're moving them out of a 5,000 square foot branch. And now we're building 1,000 square foot in a strategic location that has pods and ITMs and more drive-throughs, and focusing again more on that relationship-based financial advisory hub versus transaction heavy. So success stories, I think, are happening with people that are evolving. They're understanding that financial institutions need to be more relationship-based, more advisory, and less focus on the transaction. Transactions are still needed, but again, it's not the one size fits all. And the banks that are willing, or the banks and credit unions that are willing to challenge themselves, kind of get out of their own way, and then bring specialists like us in the industry. We work with hundreds of financial institutions. So we know these are the organizations that are being successful, and these are the organizations that are being left behind, and the reasons why.
You said it really well there, Brian. We can say that you've debunked the myth that branches are dying. I think that's a great way to kind of conclude everything I had, at least on my side. I didn't know if there was anything else you kind of wanted to touch upon in your space, but I do appreciate you joining me today.
No, I had a great conversation with you, Rich. I feel like I replay this conversation 2 to 3 times a week. Every financial institution's asking the question. What I would say to your listeners is if you're asking that same question, you're on the right path. It's easy to feel like you're being left behind, but at least you're asking the question and at least you're willing to evolve. If you're not evolving and you're not innovating, you will be left behind.
Awesome. Well, Brian, thank you very much again for the insight, the stories, the perspective. I really appreciated your time with us today here on Bank Talk.
Rich, it was a pleasure. Thank you so much.
And to our audience, thanks for joining us today. Hopefully you found it a great episode. We look forward to sharing some more insight the next time around. But until then, keep listening, keep learning. We'll talk to you soon.
Thank you for listening to the Bank Talk podcast brought to you by Remedy Consulting. If you like what you hear, please rate, review, and share our work with others. Thanks again, and we'll see you next time.